Okay, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Good morning, everybody. Welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. We are in the last week of the year. This is the last Monday of 2021. Maybe nothing will happen. Maybe something will happen. Not really sure. But we can gather here today to do some technical and fundamental analysis. So thank you for being a subscriber. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, welcome to my office. My name is Wayne McDonald. This is my 20th year, something like that, 20th year of trading Forex. Actually, trading Forex is a full-time gig. Before that, I was a venture capitalist. Before that, I was a Silicon Valley entrepreneur. Before that, I worked in the nonprofit world. Before that, I had a paper route. No, that's not true. Before that, I worked at NASA. I wanted to be an astronaut. I got close, man. Turns out they don't send diabetics to space. I don't know. I guess you dehydrate in space. So anyways, that's me. How are you? So today we'll go through the charts. We'll take a look at things. We'll poke our fingers around. We'll test the fence. We'll see what's up. And we'll be ready in case something is needed. Oh, and I want to show you my new toy. Look at that. Isn't that neat? Nice little tablet so I can trade MT5. That's euro dollar on one side. And that's Aussie dollar on the other. Right? You can do, right? It's nice, right? Oh, whoa, dude. Yeah, whoa, dude. Snap! Yeah, so I got myself a Samsung Fold. Oh, my god. Folding glass. Who would have thought, huh? So anyway, it's a new toy to play around with. I hope you had a nice Christmas, Hanukkah, Kwanzaa, or weekend. Yeah, so anyways, here we is and where we shall be. Let me go through, just basically I want to go through a routine today. Okay, so 10-year T-note 1.48, which means what? We used to be a 1.38 not long ago. I guess we can go back. Let's go back a week. Okay, let me move this a little bit. Okay, a week ago we were down here 1.4. Worked its way up, working its way up. Not quite 1.5. You can see, obviously, the market is concerned about 1.5. But the reason we look at this as currency traders is going from 1.4 to 1.5 would indicate to us dollar weakness. And that's generally what happened last week, as you'll see when we go through the chart. So that's good. The question is anything going to happen this week? Is this going to go to is it going to go above 1.5? Or are we going to do another trip all the way down to 1.3? Ooh, that's interesting. Okay. So, now one of the things I am interested in is I think in the next 6 weeks, we could do another trip all the way down to 1.3. It's not a prediction, but I'm going to be ready for it. So that's interesting, huh? Currently, Dow Jones, okay, up a little. S&P up a little more. NASDAQ up even more. Gold down a bit. Silver down a bit. And crude actually down a lot. Interesting, right? So this S&P 500, I think, is at an all-time high. Going in the last week here, huh? And yet, Omicron is in the news. Everything is spreading like wildfire. 50,000 New Yorkers got COVID this weekend. Or was it this weekend or was it yesterday? It might have been just yesterday. So anyways, we got to worry about that, I suppose. Okay. So we're looking at the 30-year here. Okay, 30-year. Is it really 1.9? Really? Interesting. This should, I want this over 2.0 on the way to actually 3.0. That's interesting how close we are. That's good. That indicates a steepening of the yield curve, which is actually good. Okay, you can see a 1 year pays about, what, 0.10? 0.10. I was going to say 1%. I'm like, what? But that's not right. Okay. 2 year, 5 year, 10 year. Okay. You can see like some of these jumps are higher than others. The distance between the 1 year and 2 years is much steeper than, I don't know, 6 months to here. So anyways, you want to look at the slope, right? Y equals mx plus b and all this kind of stuff. You can see last year, which is the blue line, the short end of the yield curve was really, really, really flat. And then once we got to beyond a 3 year, then it's steepened quite quickly between the 3 year and the 10 year, right? It's sort of like a 45-degree angle. And you'll see that now the yield curve is steepening a little bit earlier. And that's obviously due to the Fed tapering and stuff. Oh, and look at this. Thank you, Google, for these ads. I got one of these for Christmas, so that's why it's there. It's sitting on my desk, and I'm going to mount it on the wall, which is kind of cool. And these are air filters to ionize your air, but also filter out your cigar smoke. Interesting. So anyways, thank you, Google. It's funny how Google is smart enough to advertise to you, but they're not smart enough to know that you actually bought it and you don't need the ads anymore. I think they know exactly what's going on. All right. So that's that. 1.5 is about right. And cool. Oh, how many people here caught my 2022 outlook? I think it was a 2-hour video. Maybe, if not 2 hours, definitely an hour and a half of just solid content. Pete's got it. Cool. Let's take a look at how you guys answered the poll. Right on. Right on. Well, thank you for being part of the community, huh? The FX Boot Camp community. Yep, cool. My coffee's made not a bloody mess, but a ghee mess. Right on. Well, I'm glad you guys enjoyed it. Okay, let's start on the indices here. Yen is weak. Dollar is moderately strong. And this is what I would have expected maybe next week. Maybe it's maybe this is a week early or a month early. Whatever. It is what it is. I don't want to read into anything. But yen is down. That's decent. CAD is down, though. Well, oil is down and all that kind of stuff. That kind of makes some sense, I suppose. Swissy up a little bit, which is following dollar. So these two things are a little risk off, especially with CAD coming down. Okay, Kiwi has come down. Aussie is down-ish. Okay, down, a little bit of recovery, down. So the only thing going on is Great Britain and Euro. Okay, and then, of course, yen weakness is interesting. All right. Now, somebody in, I think it was in the swing trading group, posted their analysis for 2022 as well, and they were talking about central banks raising interest rates. And one of the things I pointed out on that post was that also the sort of the divergence, really the rate at which central banks change. And now that the Fed has announced its taper and essentially interest rate hikes, that gives other central banks the, not permission, but let's say even the necessity to raise interest rates, because they'll have to pay debt at higher costs, and so they need to attract capital and all that kind of stuff. So it's a competitive world to borrow money. So, for example, last week, I think it was Friday, the Czech Republic jacked up interest rates by a full percentage point. Now, we're thinking the Fed might raise interest rates 0.25%, maybe 2 rate hikes in the first half to 0.5%. The Czech Republic, boom, full percentage point, just right out of the gate. So, you know, there's a lot of central banks raising interest rates. You know, South Africa, Czech Republic, South Korea, New Zealand, so on and so forth, right? And so, but you want to look at this competitive nature that if the Fed's going to jack up interest rates, then emerging markets, as an example, not necessarily emerging markets, but definitely emerging markets, will need to compete and jack up interest rates. Not just compete for the money flow, but also they need it to service their debts, if you will. Okay. So anyway, so the UK is raising interest rates. They have, their employment situation is quite good. They have a lot of inflation, and the Bank of England is trying to catch up. And you know, they might have gotten the wink, wink, nudge, nudge from Powell. Who knows what's going on? But it's sort of weird where the entire market, it was reported 100% chance that the UK was going to raise interest rates 2 meetings ago, and Governor Bailey didn't. And then he waited a meeting, and then he did. So it was like, well, why wouldn't you just do it earlier, right? So anyways, it's strange, right? Okay. So anyways, interesting. The first thing you should know here is it's sort of a mixed bag. And seasonality would indicate, I'm not that surprised right now that dollar is strong. Traditionally, it would be much weaker going into this period. But if it wants to be a little bit of strong, look, it's been strong. I get it with COVID out of control, tens of thousands of flights being canceled around the world, not because of lack of demand and not because workers don't want to work, but many workers are sick. Okay. So, so if you wanted to buy dollar, traditionally it's a little bit early, but I don't think anyone's going to bother you about it either. So, okay, great. So I don't know if there's trades today. I don't know if there's trades this week, but let's do our analysis anyways, right? What was that? Hang on. I gotta change the settings on my phone here. You have to unlock it to read your text, which I think is stupid. I think I could do that, but anyways, neat, huh? Hello, is it okay to trade on bank holidays except for Christmas and New Year's Eve? I do not recommend it, Super Data Wolf. The part is that technical analysis will be less reliable. So the answer is you can. I'm not sure your reasoning of why you need to, but if you did, just recognize there's a little additional risk associated with the market conditions. Okay, here's our gold. Okay, and we've been farting around here sideways, 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 sideways. Okay, up to the top of the range, down to the middle of the range, back to the top of the range. So again, down and up, down and up. You can see by the price action pivot points here that the slope of the mean is positive. So, but we didn't go a standard deviation from the mean. So I still look at this as sideways and not up. Okay. Okay. Now, Bitcoin is interesting because I had $44,444.44 as the December low, and it only got to, where's that low? Can I see it? 47, 40, no, it's lower than that, isn't it? Can't quite see it. Maybe. No, it's more than that. Hang on. Oh, I'm looking at high. No wonder. Low, 46,000. 45,000 and some change. Okay. And it's pulled back up. And the most important part of this scene here is it broke above 50,000, which is approximately here, and is maintained above it, trying to ride that 4-hour 21, it looks like. So what this chart tells me is sideways for, well, I suppose now, right, when the stock market opens, this will push up and then the 21 will catch. But it's been sideways since Asia. But the pattern is that this 21 EMA is going to push it up. Okay, probably only to the 200 EMA. Puts it at 52 and a half, maybe. But we don't know about the volume and volatility, so you want to kind of look further out. So that's it, gold. I guess we can do it, my oh my WTI. Okay, that's the daily look. We'll zoom in a little bit. Okay, and well, it's a little bit up. We're at fair market value is how I look at it, really. You might want to look at daily and see, it says down one more time and then up. Okay. Now, I look at this, and yen is weak, that's for sure, but still nothing has really happened here. I wouldn't read too much in this, but I would look at things this way. A bull might want to buy this. I find that actually overly aggressive, but it's plausible. A bull should buy it down here, 77.5, which I already have it marked, or even lower. So for a bull to buy it here, way out at 77.77, it feels like a Hail Mary to me. Now, a bear selling this at 78 makes a ton of sense. Okay, you see that? The bearishness makes a ton of sense, on the short run at least. Okay? Okay, same thing here. A bull could buy this way down here, 82, 81 and a half. So here we are near 83, and it looks, well, first of all, it looks like nobody's trading it. But if someone was trading it, I think down at least to 82, so down 75 pips, is more than reasonable, huh? Milos, I just haven't done it, that's all. Okay, so anyway, sideways, sideways, sideways. 32.82 is a bearish weekly sell zone. The pink area to the left is a bullish exit zone. Okay, the lack of higher high is not bullish. And the drop to the 55 tells us an increased likelihood of top. So this drop down to this 55 says, be cautious up in this zone. So what the chart is saying, like maybe up towards 83, but then we don't know direction, but the chances of a drop increase exponentially. That's what this says. Now, you might be a bull and say, well, I think we're going to make a higher high. Yeah, but you're buying it at a price that's too expensive. Okay. Theta says, hey, I see January more neutral for the market till the end of the month. But you have to have reasoning. So that sounds like maybe reasonable. Like it's reasonable that it might actually happen, but it's not sound logic. The reason, like, let's say dollar does get strong, has nothing to do with market conditions, the flow of capital because of supply and demand equilibrium and all this kind of stuff. It's part of the mechanics of the market. So you wouldn't see anything on this chart, and it wouldn't be like a central bank announcement. It's just something that happens. So it's not that neutrality isn't possible, but it has to be more than an opinion. So right now, CAD's been weak, but the yen is even weaker. Interesting, huh? So what do you want to do with this? Well, the way I think you have to deal with it is trap it inside a range and then see how it behaves inside the range. I've already marked this as a buy zone down at 88.33, but we're way up here, 89, right? 89.33. So we're 100 pips out of position. We're much closer to resistance, and we're at a weekly sell pivot. So again, even if you're a bull, you want it to come down more, and a bear is going to try to bring it down. Or you're going to try to ride this 21, but once again, that means you're buying out of position and you're really aggressive, and then I would caution and say, okay, I don't disagree with you on direction, but why are you so aggressive in a week where there may be little volume and volatility? And you might say, because there's little volume and volatility. And I'll say, okay. And we would just have, you do you. But I would scratch my head a little bit and say, why such aggressiveness, right? Now, this one on the 4-hour is working out better than what we just looked at. And it's a little bit different because it's already kicked off the 4-hour 21. The other pair was, kind of tickled to 55 and a bunch of these other things. Euro dollar is riding, but it's out of position. You can see last week's bullish trade plan worked. Then it came back, kicked off the 21, which is how you trade an out of position trade, and is now technically, over the last couple of days, now making a new higher high. That is aggressive. But that's a much different setup than the other one. Now, the question is that predictable? Well, the thing that I'm pondering is, as we go from rotation into rebalancing, I'm wondering about the flow of cash for investments. And I've been saying Europe is probably, the European stock markets are quite attractive this year relative to the S&P 500, and some of that flow might be going there. Now, the UK also could be a great one because they're also going to be raising interest rates. But right now, I think it's a valuation play that money goes to Europe. And, what sort of, saddens me or makes me upset or disappoints me is that all of that happened way back here too. And then this collapse was just disappointing. And then, of course, we had the fundamental up, which was predictable. Then this massive crash, which is sort of anti-fundamental and devastating technically. And then the response to that devastating technical reversal is a full bore, right, move back up. And it's the volatility, the rate at which it did it is just super unusual. Okay? Super unusual. So, holy smokes. And now it wants to make a higher high. Well, that is interesting. Okay? That is interesting. Anything else in our way? Well, we're through the M3, weekly M3, so we're through the weekly sell zone. And at some point when this finds a top, that's going to be the January M3, which I would find more interesting if it was a dollar pair than a yen pair, but still. Okay. This just says middle. So this tells us the euro and the dollar are both strong. That's why euro yen is moving up. Okay? What does this say? Dollar is strong, but pound is just maybe slightly stronger. Okay? So that might get you like a beast trade, right? This is all my reasoning why I think the pound dollar is going to go up. Oh, ooh. CAD less well, pound doing great, Kiwi less well, Aussie doing okay. Okay. There's our plan from 2 weeks ago. Still valid. Cool. Any questions? By the way, portfolio managers and associate portfolio managers, make sure you get your accounts open. I'll be sending out an email in a day or two, or maybe we'll do a meeting in a day or two. No? Everybody good? Okie dokie. Well then, have a wonderful holidays. Volume and volatility will likely be thin between now and New Year, so be careful. Plan your trades, trade your plans. Pete wants some XRP. Yeah, why the hell not? Got to get rid of Ethereum. Okay, and do I even have it anymore? Okay. Wow. Okay, so this one's sort of weirdo. Let me just clear this up. All right. Well, we got a low here. We got this and sort of this. And we're on a central, so let me zoom in now. So we're a bit, okay, we're in a bullish buy zone now, although it's not a great price, it's a neutral price. Bears have taken it down. You can see there's a drop, lower high, lower low, lower high, lower low. Okay, so a bear is going to look at a lower high and sell it around 95. Okay. And so a bull should probably wait just a slight bit for that to fail and go for something like that. And of course, you're going to want Bitcoin to do the same. Now, plan B is way down here. So bears could also take it down here, and then a bull might want to look for something like this. Okay, it's going to be more challenging for a bull if you're that low. But if it stabilizes up on the 200, up on the weekly central, okay, then that's probably best case scenario. But I know a bear is going to sell this at 95. The issue is, are we on our way down, down here into the 80s or not? If we're going to stay up above the 90s, then then that's what we're kind of looking at, okay? And so if the reason there's more bullish than bearishness on this setup, even though there's a lower low, it's because it's this move in mind. Okay? That would be the bullish point of view. Okay? Right on. Okay, great. Peace on earth. May the pips be with you. May our profits be above average.